Are you familiar with Cathie Wood? Some call her the queen of investing. Back in 2021, she predicted Bitcoin would hit 500k. By 2023, she upped the ante to 1 million. And now, she just called for 1.5 million. At first glance, it's like she's tacking on 500k every 2 years, right? So if these patterns hold, I'm gonna make a bold prediction myself. By 2027, she will call 2.5 million per Bitcoin. What do you think of that? What do you think about my prediction? 2.5 million per Bitcoin. Is it a good price? Do you believe that? Tell me in the comments if you think that sounds realistic. Or even drop your own crazy prediction in the comments. Okay, I'm kind of kidding around a bit. But when you look at those headlines, this add 500k every 2 years thing feels a little bit too simple and almost too bold. Anyone could throw out numbers like that, right? No, not quite. Cathie's ARK Invest is a top-tier fund focused on disruptive innovation. They've got a whole research system backing them up. So this isn't just random guesses that they pull out of their hat or out of thin air. So today I want to dive into what's behind Cathie's super bullish view on Bitcoin, super bullish Bitcoin predictions. Why does she keep raising the price target every couple of years? And how does her team crunch the numbers in their reports? Do their arguments actually hold? And most importantly, why, while I'm long-term bullish on Bitcoin, I don't buy into her 1.5 million prediction? Hi, it's Cédric. New friends, hit that subscribe button. Old friends, make sure your notification bell is on. And if you want to discuss directly with me, you can also add my personal Telegram, the link is in the description, just to have a chat about all this. But we can also discuss in the comments, whatever you prefer. Let's get started now. Let's have a look at how does Cathie Wood and her ARK Invest team even come up with a value for Bitcoin. So it will be in this section in their report, digital wallets, public blockchain, and Bitcoin. So first of all, lots of people have their own takes on Bitcoin. But for Cathie and her team, it's not just a simple digital currency. It's a complex, multi-purpose, game-changing asset. Digital gold, of course, it's a hedge against fiat inflation and loss of trust, but it's also a global settlement layer. Borderless, no approval needed, bypassing the dollar. It's neutral and super efficient. And also it's a censorship-resistant asset, letting you truly control your wealth as long as you keep those private keys safe. So okay, because Bitcoin can play so many roles, ARK's valuation method isn't about just staring at price charts. It's not about chasing market vibes either. Instead, they use something called a scenario penetration model. You can see that clearly in all of their reports. Bitcoin penetrating the market, digital wallets penetrating the market, blockchain technology penetrating the market, AI. The term penetration rate is really recurrent. You can see it here again. It's really about figuring out how much market share Bitcoin could capture in different use cases. So here we are on page 65. You can download, I think I will put a link, or you can add me on Telegram and I will send you this report because it's really interesting. Let's take this one as an example, because here they will list 8 key scenarios, like the ones I just mentioned. How much Bitcoin will institutions hold? Will countries use it as a reserve asset? Can it steal gold thunder? For each scenario, they will predict what percentage Bitcoin could capture by 2030. And here, compared to the other years, that's why I start at 2023, they will present you 3 case scenarios. For example, for a bullish case, they will say that institutions will allocate 6.5% to Bitcoin, 2.5% in the base case, neutral case, or just 1% in a bearish case. Then they will add up, the expected value from all these scenarios across the different cases and divide by Bitcoin's total supply, 21 million. That gives them a price range for 2030. So in this 2023 report, the number came out to 260,000 in a bearish case, 680,000 in a neutral case by 2030, and 1.5 million in a bullish case, 1.48. So in 2023, when Cathie Wood through, this 1 million number, it was catchy. Of course, it's 1 million. It's a psychological price. But it was really optimistic leaning, a really optimistic leaning number from that range here. Next question, why does her price target keep climbing, doubling every couple of years? Well, it comes down to how ARK dynamically tweaks their model. Basically, they see real-world developments validating their optimistic outlook here, sometimes even exceeding it, so they feel justified, like nearly entitled, to plug more bullish numbers into their models, especially for that key penetration rates. So from 2021 to 2023, why did the target double? It was all about institutional adoption. Big players like BlackRock started applying for Bitcoin spot ETFs back then. ARK saw this as a sign institutions were about to go all in, so they cranked up the penetration rate for the institutional investment scenario in their model. It's like they went from thinking institutions would just dip toes into now believing they'd dive in head first. That boosted the overall value here of this part, that's the major part, pushing the target price toward that 1 million plus range. But then, from 2023 to 2025, why jump to 1.5 million? A few new developments came into play. Let me switch to the 2025 report. And let's go to Bitcoin. First, we can see it's sooner in the report, it's on page 29. But what changed? ETFs actually launched here, and they crushed it. ARK's 2025 report goes deep on this, calling it the most successful ETF launch in history, with massive inflows. This confirmed that past years, institutions are piling in theory, boosting their confidence. And then we have AI. In 2023, AI was just a side note, but in 2025, Cathie's interviews and this report's convergence concept highlighting AI, creating a machine economy, got out. So what's that? That's something we can find a few pages later. Here you have the convergence concept, and a little bit after you have this kind of explanations on how AI systems will be buying, paying, and settling transactions on their own. But for that, what do they need? They will need public blockchains. Why are public blockchains critical? Because they are not tied with the dollar. They are not tied with banks. AI needs a global, decentralized, neutral settlement tool. And Cathie says Bitcoin is the perfect fit. So this new AI economy adds a huge use case, jacking up the price target toward 1.5 million. Of course, they also talk about stablecoins, taking a larger share of the market. But still, behind all that, the digital gold is Bitcoin. So it jacks up the price of Bitcoin. Back to Bitcoin, they also said something really important. Supply, inflation rate, volatility, hash rate, all the fundamentals, long-term holders ratios, cost basis, everything hitting all-time highs, reminding us that Bitcoin even absorbed big sell-offs like from the German government or Mt. Gox without breaking a sweat. That shows resilience. So stronger case for Bitcoin attaining a new all-time high and getting near 1.5 million. And yeah, I want to insist on that here. They insist too on the fact that after the 2024 halving, Bitcoin's inflation rate dropped below gold. You have that here on page 32. Add to that the scarcity story that just got juicier. When you sum everything up, ETF took off, so institutions jumped in, so value spiked. AI exploded, so machine economy needs settlement, so Bitcoin value will grow. The network got tougher, so we have more long-term holders, so the value will climb. And we have the supply that is shrinking, scarcity increasing, so the value will soar. They are really stacking everything like Lego blocks. And every year, every couple of years, they will find a new block to stack to that, a new use case, a new catalyst, and add it all together to this Lego tower to tell us why the price will be higher. And it makes sense when you have a look at these kind of reports. You can have a look, it's not too hard to understand. There is a lot of graphics and everything, it's really interesting. And it makes sense, and it's really pretty convincing. Their logic holds together. So why do I think that their 1.5 million prediction in 2030, while exciting, is still a long shot? I have no doubt that one day Bitcoin will get to 1.5 million. But when you dug into their report and Cathie's interviews over the past 2 years, you can see that their report do a great job arguing Bitcoin fundamentals and intrinsic value are growing, like a stronger network, institutional access, and more use cases. It makes sense that proves Bitcoin is getting more powerful and has a huge upside potential. But connecting that to a jaw-dropping 1.5 million price tag in 5 years, the bridge isn't quite there. Why? Because their model hinges on those penetration rates, how much market share Bitcoin will grab in each scenario by 2030. But those numbers, they are essentially educated guesses, rooted in their super optimistic beliefs, not hard data. So they have some laws, like the rights laws, stuff like that. But I still feel like it's like saying because of a student grades improved. That's a fact. You have the data, you can do charts about that. But it doesn't allow me to predict that he will be a really big CEO in 10 years. There is a huge gap between those facts and the outcome I'm looking for. Their reports highlight positives like ETF success and stuff like that, so they feel confident saying institutions will allocate 6.5 instead of 2.5%. They add a new market, the AI economy settlement, and assign it a penetration rate too. But their model, I think it oversimplifies things and skips over headwinds. Market pricing isn't just about potential market size and penetration rates. It's messier than that. It's driven by liquidity, market sentiment, economic cycles, news shocks, leverage, derivatives, and more. Do they dive into those? No, not at all. What about, the geopolitics? We have seen what a pro-crypto American president could do to crypto, but they didn't address that at all. And worse than that, competition gets downplayed too. I was talking about the competition between stablecoins and Bitcoin for a settlement layer. They didn't dive into it. Bitcoin is awesome. I like it, but it's not alone. We have Ethereum, Solana, Tron, Cardano. They are all fighting for turf, capital, and use cases. Bitcoin might take the lion's share, of course, but others will siphon off some liquidity. Their model doesn't seem to fully account for that either. And last but not least, if you do some quick math, Bitcoin's market cap is about 2 trillion right now, with a price of around 110k per Bitcoin. To hit 1.5 million by 2030, that means a 20 trillion market cap. That's 18 trillion more in just 5 years. That's a lot. Where will that money come from? They didn't address that. Will it be from new wealth? Or will it be shifting from stocks? Will it be shifting from bonds? Will it be shifting from real estate or gold? How big are the barriers? How fast can it happen? They don't dig into those questions either. And on top of that, they are selling funds for you to invest in. So we can believe that they may be over-optimistic. That's how I see it. I'm sure Bitcoin will get to 1.5 million. I have no doubt about that. And I think they are too. But maybe the time frame is not correct. Yes, if you want to wrap this up, ARK's report offers some killer insights. Their analysis of tech potential and their bold vision for the future is really worth studying. I really enjoyed, having a look at those reports. But predictions, they aren't reality. As investors, we've got to stay sharp and rational. Let's not fall for the confirmation bias, because we have Bitcoins. We are holders. So yeah, we want to hear that. But we can't. We cannot just drink the Kool-Aid. We have to take their analysis as one possibility, as a reference point, as a way to think about it. We have to weigh it against real-world constraints and think critically. Of course, the final call is on you, and the market will tell us who was right and who was wrong. I just want you not to be over-optimistic. Yeah, that's it for today. I'm Cédric, and if my breakdown helped you or sparked some ideas, don't forget to like, subscribe, and share, and drop your thoughts in the comments, of course. And yeah, that's just my view. Everything I've shared is just my personal take on that. It's not investment advice, NFA, you know that. Markets are risky, so always do your own research and take responsibility for your funds, your money. And yeah, that's all for today. Catch you in the next one.